In the year 2000, General Electric was the most valuable company on Earth, worth almost $600 billion. 18 years later, it got kicked out of the Dow Jones after 111 years on it. And the investors who rode it all the way down? They weren't stupid. They were in love. Falling in love with a stock feels like conviction. It feels like patience. But it's the single most expensive emotion in investing, and today I'll show you exactly how it hijacks your brain, and the two questions that snap you back to reality. Here's the uncomfortable part. The problem isn't the stock. It's you. And it starts the second you hit buy. Psychologists call it the endowment effect. The moment you own something, you value it more than the market does, just because it's yours. Studies show people demand roughly twice as much to give up an object as they'd pay to get it. Then comes the second trap. Sunk cost. You've held the stock for 3 years, you're down 40%, and selling now would mean admitting you were wrong. So you don't. You wait. You add more. And the third trap seals it. Confirmation bias. You stop reading the bad news. You only click the articles that agree with you. The stock becomes part of your identity, and now you're not defending an investment. You're defending yourself. But here's where a real name makes this concrete. In 2015, one of the sharpest investors alive fell in love. Bill Ackman, a legendary hedge fund manager, bought a huge stake in a company called Valeant Pharmaceuticals. At its peak, that stock hit $262 a share. Then the accusations started. Aggressive drug pricing. Questionable accounting. The stock began to crater. An irrational analyst would have asked one question: would I buy this today? Ackman didn't sell. He defended it publicly. He went on television and fought for it. He held as it fell, 200, 150, 20. He finally sold in March of 2017. At around $11 a share. The loss? Roughly $4 billion. Not because he couldn't read a balance sheet, he's brilliant at that. Because he'd stopped seeing the company, and started seeing his own reputation. So let me ask you directly. Think about the biggest position you hold right now. If you didn't already own it, would you buy it today, at this exact price? Yes or no? Hold that thought. Because the answer separates investors from collectors? Now here's the part that flips everything. The goal is not to feel nothing. Warren Buffett falls in love constantly. He said he wants to hold great businesses forever. He adores Coca-Cola. He calls See's candies a dream. So what's the difference between Buffett and the investor who rode GE to zero? Buffett loves the business. He never loves the stock. And he proves it with actions that look almost cold. In 2011, Buffett bought over $10 billion of IBM. He was convinced. Then the numbers stopped supporting the story. In 2018, he admitted out loud, "I was wrong," and sold nearly the entire stake. Then in early 2020, he owned billions in the 4 biggest US airlines. When COVID hit and the thesis broke, he sold all of it at a loss within weeks. No defending. No hoping. Just, the facts changed, so I changed. That's the whole secret. Buffett put it best: the stock doesn't know you own it. It feels nothing for you. Your loyalty isn't repaid, it's just exposure you refuse to look at. And that leads to the system that keeps you honest. So how do you actually stay objective when your money and your ego are on the line? You build the decision before the emotion arrives. Rule 1. The blank slate test. Once a quarter, ask, if I held only cash today, would I buy this position at this price? If the answer is no, you're not investing anymore. You're just hoping. Rule 2. Write your sell thesis the day you buy. On paper, list the 3 things that would prove you wrong. When one comes true, you act, because the calm, rational version of you already made the decision. Rule 3. Separate the story from the ticker. Judge the business on this year's cash flow and moat, not on what it did for you in 2019, and not on how much you've already lost. The past position is a sunk cost. The future is the only thing you own. Remember what I said at the start, the GE investors weren't stupid. They were loyal. And in the market, loyalty to a stock is just an expensive way to ignore the truth. So love businesses. Study them, hold the great ones for decades, let them compound. But never, ever love your position. Because the moment you'd rather be right than rich, the market has already won. This is educational content, not financial advice. Always do your own research, and remember that past performance never guarantees future results. So here's my question: the biggest stock you own right now, if you had only cash today, would you buy it? Yes or no, tell me in the comments. And tomorrow, I'm breaking down the one number on the balance sheet that quietly predicts bankruptcy years before it happens. You won't want to miss that one.